Eddie Ghabour, market watcher of the moment. I want to talk to you about the Federal Reserve. The President Biden, he's got 3 picks from the Federal Reserve. He can replace the chair if he wants to, and he's got 2 other picks as well. What happens if he chooses a dove, someone who will print a lot of money to fund the president's spending plans? What happens to the market?
So look, initially we'll probably get a spike in the market, but I got to tell you, this is very, very concerning to me. I mean, our Fed has already been dovish enough, and look at the inflation. We've been telling clients and sharing with your viewers that inflation is going to continue to accelerate. We're now at acceleration rates that we haven't seen in over 30 years. If you put a dovish Fed that doesn't put a stop to this inflation and they just add more money and loose monetary policy, this is a ticking time bomb that then ultimately we will hope that we only see a 15 to 20% correction next year. Because if they let this bubble continue to get bigger and bigger and bigger from an inflationary standpoint, it's going to break the back of the market. And most importantly, hardworking Americans that are having a hard time right now being able to pay for higher gas prices, food costs, housing, and rent. I mean, look, just take a step back. Can we really afford to put more money in fuel and make things more inflationary than they already are? It'll be an absolute disaster. So I hope they stick with who we have now, because at least we know the path they're going to be taking.
It reminds me of the late 1970s, a build-up in inflation, and then you have to do something about it, and in comes the Federal Reserve with a massive stop printing money. That could be a repeat performance, you think?
I really do. And here's the other thing, Stuart, is inflation has been a tailwind for risk assets, and we know that, and we've been paid handsomely for it. Next year, it's not going to be. It's going to be a headwind. The consumer cannot continue to take on these hikes. So the Fed is going to have to accelerate tightening while GDP is decelerating. That is, again, the worst combination the market could ever want. And that's the path we're heading on.
Yep.
And if they get more dovish, all that's going to do is make it even worse. So we have to address it now when it's already a problem.